Well, I think the market certainly believes it, and if you read the flurry of reports that followed the announcement of LVMH's acquisition of Loro Piana, there are plenty of analysts out there who are now listing the next targets they see, particularly in Italy. Why Italy? Well, that just happens to be where most of these luxury goods companies are, particularly from a fashion and leather goods perspective. But there's also another play going on here, and this is partly to do with the economy in Italy. Analysts feel certainly that financing conditions are pretty tough for some of these companies when they're looking to expand. And you have to remember as well that a lot of these companies, even if some of them are listed, in the case of Tod's, in the case of Ferragamo, they're still family-run companies. And there's a degree of speculation, given that the Loro Piana brothers both said in a French newspaper interview that they felt that they weren't really equipped to necessarily take the company to the next level, both from a financial perspective but also from a management perspective, and that they needed to be part of a big group to do that. We're going to see potentially other companies which are of a similar size, or perhaps even a little bit bigger in the case of Tod's and Ferragamo. We're going to perhaps see them look to sort of join some of the big players. It's very interesting actually if you look at LVMH. LVMH has been the sort of most perceived likely buyer, I suppose is the best way of putting it, of some of these assets. It's interesting if you look at the interplay with Tod's. LVMH already has a 3.5% share in Tod's. Diego Della Valle, who's the chairman and founder of Tod's, he's actually on LVMH's board. And there's a degree of speculation anyway from Telsey that when Diego Della Valle perhaps seeks to retire, and he's 59 now, so perhaps down the line, sort of 5 to 10 years away, LVMH may even pounce, but it could even be sooner than that, and I think that's what's pushing up the stocks at the moment.
Andrew, tell me this, when it comes to valuations, because the race is on to grab these brands, does this remind you of what happened in the mining industry, let's say over the past 10 years, which is that premiums get pumped up because of the scarcity of assets out there in terms of actual brands that the likes of LVMH can buy?
Well, I think it's interesting. There's been a sort of recalibration of people's expectations. I think during the financial crisis, you're going back to sort of 2008, 2009, a lot of the valuations were sort of thrown out the window and people started again. We go back. I can take Cavalli as an example. Cavalli isn't for sale. The company has said that. But, it was looking perhaps to explore a sale maybe 5 years ago, and they were talking around a valuation of about 2 billion euros. It's now being valued around 400 million euros. So it's quite a cut there. Having said that, those valuations are increasing, and that's partly to do with the scarcity of assets, but also the increasing number of potential buyers, be they large conglomerates or whether they're private equity or sovereign wealth funds.